In today's video, guys, we're going to go through two methods of managing your open positions. Not only will we go through these two methods, but we will also go through how market conditions can be conducive for one method and not the other, and also how you can be able to capitalize on the different market conditions using these two methods of position management. Now guys, to start things off, we do see that we have some percentages here and we have structure. So these are the two methods of managing our position. Number one, we can either use percentages to manage our open positions, or we can use structure. Now let's get into percentages. I'll just create a hypothetical example here by doing that. And then we'll create one on the right hand side as well. Okay, so we'll get into the percentages. Now, how do we manage our trade in terms of percentages? What we know is that normally when we trade, we try and trade with a good risk to reward ratio, nothing less than 1:3, a risk to reward ratio of 1:3. So what this means is we are risking 1% to make a potential profit of 3% or more. Now, how we can manage our trade according to percentages is very simple, guys. We wait to manage our trade as our trade hits our different percentage markings. So if we are risking 1% to make a total of 4%, how we will manage this trade is we'll enter our position. When our trade gets to 1% profit, we'll lock in our trade at break even. When our trade gets to 2% in profit, we'll lock in our trade at 1%. When our trade gets to 3% in profit, we lock in our trade at 2%. And when our trade hits TP, we're obviously out of this position. Now that's one way to manage our trades. Now, how managing our trades in terms of percentages helps and where we could most effectively use this method is during consolidating markets. Now, we know that consolidating markets obviously are sideways moving markets, generally sideways moving markets. And we also know that if we're looking to trail or to manage our trade using structure, we'll more often than not get stopped out. For example, if we took a sell in this area here and then obviously looked to trade the structure, what we'd be waiting for is for prices to break and close below the structure here. We'll move stop losses above previous structural highs, and as you can see, we'll probably get stopped out. And now this is obviously because this is a ranging market. Now, trailing our stop losses using percentages helps us capitalize and secure profits in a ranging market, in a market that is going to give us highs and lows and take out those highs and lows. The best, most efficient way to manage our position is using percentages. So how this helps us is that obviously if we did take that sell within these areas here, we'd obviously just be able to manage our trade according to percentages. That when our trade gets to, for example, 1%, we lock in at break even. When we get to 2%, we lock in at 1%. When we get to 3%, we lock in at 2%. And you can see that maybe we would have exited this trade with a profit of 2%. Whereas if we trailed our stop losses using structure, we would have got stopped out at break even. So managing our trades using percentages or understanding our percentages and managing our trade according to that, when specifically the markets are ranging, will give us a better opportunity to be able to capitalize and still secure profits. Now we'll go into the second way of managing our trades, guys. Now the second way is using structure. All this is that, for example, we enter the market here, we wait for, because we are looking to sell, we obviously expect something like a downtrending market. And if markets are trending to the downside, if we just look at or talk about the characteristics of a downtrending market, is a market where we want to see consistent lower lows and lower highs being formed. So if we look at that exact same example and say that we're entering a sell here, all we'll be doing is trailing stop losses according to the new structure that has been developed. So once we see this low being formed, created, we expect a lower high because we're in a downtrend. We're expecting that lower high to form. Once prices break and close below the low that was just recently formed, that's when we move our stop losses above structural highs. Same thing again, as new price action develops and we create new lows and new lower highs, all we wait for is for prices to break and close below the new low that was formed, and then we trail our stop losses above previous structural highs. Now, how this actually helps us and allows us to be most efficient is during trending markets. So for example, if we manage to get into, for example, just a nice young potential buy, let's just do this hypothetical example and say that we managed to find some sort of a buy entry somewhere in here, obviously preparing for this next impulsive market. Now, how we'd be managing this position is we'd wait for highs. Because we are buying, we're expecting markets to be in an uptrend. We're obviously waiting for that high to be formed, for that higher low to form. Once prices break and close above previous highs, we trail our stop loss below structure. And then obviously we wait for the same thing. Just rinse and repeat, guys. We wait for our structure to continue to trend to the upside to give us that higher low, that higher high and that higher low. Once prices break and close above these structural areas, we trail stops above or below previous swing lows. Same thing again, when we see that higher low, when we see that higher high and that higher low being formed, we trail stops below previous lower structure. And you can see that within this market, we'll obviously have been stopped out at the low of this structure here. But if we look at how much we were able to capitalize on this position by locking in profits at that area there, we managed to get a trade that gives us 6% on our return, on our investment, sorry. So what this does is that when markets are trending, it makes a lot more sense to trail and to manage our position using levels of structure. When markets are consolidating and markets are obviously moving sideways, it makes a lot more sense to manage our positions using percentages, guys. Now, I know this was a very quick video, not a lot of detail, very simple. I hope you guys gained so much value. You guys probably saw or got a life hack, a Forex life hack that can help you guys still capitalize, still be able to manage your positions efficiently in both ranging markets and trending markets. And that was the point of this video, to give you something that will make you become a better trader. Now, if you've received some value, guys, definitely do drop this video a like. Otherwise, if you're not subscribed to the channel, definitely do subscribe to the channel. I will appreciate it. Otherwise, this is Tramayne, your FX Chasers mentor, guys. I'll see you in the future videos. Cheers.